Good morning, everyone, and welcome to Ninjacators Wednesday's Morning Bell with me, Richard K. All right, guys, quick look at today's economic calendar. Not really much happening. We got crude oil inventories might affect crude oil, which has been finding support and still pretty messy price action. We'll be looking at crude oil a bit closer in just a moment. Then I think the volatility might pick up towards the end of this week. We're already halfway through it when the first half Jackson Hole symposium, starting tomorrow, with potentially Friday being the most volatile day out of the, I think it's a 2 or 3 day event when the Fed Chair Powell speaks. Now, previously it was expected when they released the Fed meeting minutes previously for the month before, was that for July, that, the Fed might be a bit more dovish in relation to their planned interest rate hikes. Now, I don't know how people read into these things sometimes. I've tried to read some of the transcript, and apparently it was not as dovish as people expected, but more hawkish, and it said sent the dollar flying back up to the sky. As a result, also the ES and NQ start moving lower, as well as gold. And obviously, this all happened from within resistance zones that we identified before. So we'll just keep an eye on these events and probably only know by Monday whether these current declines we're seeing are actually start off new downward bearish moves that could result in pretty deep retracements, or whether price getting ready to move up in that final little small initial fifth wave that we've been talking about for quite a while now. Again, if you don't know what I'm talking about, we're going to be looking at the charts in just a moment. Just a quick reminder, these sessions are recorded, so if you do miss it, you'll probably see that there's a recording available at a later stage in your inbox. And we're also streaming live on YouTube now. So if you guys got any questions that you might want to ask, then you can pop it there into YouTube's chat or either here in the chat in the Zoom room. Right, guys, I know some of you might have been attending some of these sessions before. Maybe it's your first time over here. So please stay till the end of today's session. We're normally going for about 30-40 minutes. I've prepped a pretty cool example of an actual trade I did quite a while back. Pretty large swing trade, one of the better trades I've had in the past few years. And what I wanted to do with that example is just show you my methodology of what I'm looking at with market geometry. I do understand if you're new to market geometry that if you do look at the analysis I'm doing currently on the ES, NQ, crude oil, and gold, that this might be a bit new, might be a bit confusing, and might look like there's a lot of lines on the chart. It doesn't make sense to you. So just stick around till the end. If you're watching the recording, then below this video in the comment section, if you want to jump to that, or not comment section, description section in the YouTube live stream recording, just jump to the last timestamp there. We'll be explaining my methodology. So stick around for that. I think that's just a really cool way to get everyone up to speed to exactly what I'm looking for, using market geometry and trying to determine areas that I want to trade from. Okay, so that's it from that. Let's have a quick look at the ES. Again, we found, or the ES found, resistance at the center median line of this pitchfork that sloped to the upside. It was this last week already. We identified a resistance zone. Price moved into the resistance zone and since moved lower. Again, in the bigger picture, I say intermediate term, I'm hoping that this was just the end of this recent high, end of the third wave, with whatever's happening here, a potential fourth wave, with another fifth wave to follow. If we do get that one more move to the upside, that'd be really cool, because then I think there's a really high probability that price could go to new highs potentially by the end of this year or next year without breaking these lows that were set in June. Because I'm still viewing this entire move here as the end of a potential correction that ended in June, if that makes sense. That being said, I was also a little bit fearful. Let me just get rid of this. that what's ever happening over here, since that low to this recent high, hopefully wasn't something similar that just happened here. So this now, obviously, after the case, was an expanded flat ABC pattern. It was corrective in nature. It must have been because price didn't go to new highs and price created a lower high. Sorry. Yeah, lower high and moved towards new lows, breaking these lows. So that was just a very large ABC correction. Hopefully, this isn't the same, what we've just seen here. And then, boom, we go lower. So that's something to keep in mind. And we'll know whether this is or was the end of a correction. If price fails to make a new high, it doesn't find support within this area we identified last week. We'll just get rid of this, clean this chart up a little bit. But price continues lower and it breaks this high 3,950. That's my invalidation level. Price is not really that far off that level. It can be reached very quickly, especially during volatile times. Could happen in a couple of days, 3 days even. Because if this is a fourth wave that we're dealing with at the moment, it should not move into the area of the first wave. If that makes sense. So we need to find support here pretty soon. That support in the form of this lower median line. Price has not reached that, so it could potentially bounce higher now, make another move to the downside. Actually, let me get rid of this blue line over here. And that's ideally what you want to see with a correction, right? Some sort of third wave behavior or combination thereof. Meeting areas of confluence, in this case, a low median line of this pitchfork sloping to the upside. And remember, we also have this zone, it's which we derived from or identified from where previous lows formed, as well as looking at the volume profile from this entire move lower, this massive move that we've seen to the downside. Okay, so we've got a very high volume peak in the volume profile, right within that same sort of area. The price is almost right at that right now. I'm just a bit worried this has been sort of one directional. We haven't seen some sort of zigzag behavior that resembles a corrective move, if that makes sense. So yeah, let's hope price finds support and heads back up. Again, we need to break confirmation above this area to count beautifully as a 5 wave. I'm seeing this is a third wave because your third waves are typically expansive in nature, right? Much longer or higher in range than your first wave. Okay, or impulsive in nature, should I say. So again, that's the ES. I reckon we need to hold between 4,084 and a quarter to 4,160 in that support zone. We could still move a little bit lower, perhaps meeting this lower median line and still go up. But if price fails below there, doesn't make a new high, so then I think DES is in trouble. Same with the NQ. Then we might get something similar to what happened over here when we had this move, similar behavior there, and a boom, straight down. It could turn pretty nasty, pretty fast. If that makes sense. Hopefully that's not the case. So we do have the levels to what we're looking out for. So with the Jackson Hole Symposium starting tomorrow, leading into, I think it's Saturday when it ends, I don't really want to be placing any target levels. I think the ES and the NQ is at real important decision point in time, should I say that. All right, before we look at the NQ, something else I noted over here, because someone else asked me the other day, one of our viewers, what all these tools are within my drawing tool tile, which is a little indicator that I have here at NinjaTrader. Not Ninjacators. Ninjacators actually, oh sorry, NinjaTrader has actually got this included. And, you know, all these are my market geometry tools. We also have, you know, writing tools, some arrows and all that stuff, pretty self-explanatory. Obviously, the pitchfork that I used mostly. And then I think I was particularly asked about Fibonacci time zones. And, you know, we all know or should know what Fibonacci extensions are. Extensions generally measure a range, let's say in this case downwards. You select starting point, in this case a low and a lower high, and then that range is extended lower from your third anchor point. Makes pretty sense, right? By the way, that's also where we had 138.2, or just a little bit up. I don't have that perfectly set, but it's very close. An extension of this first drop to the downside, right over there. So we all know how that works. We also know how your Fib retracements work. You just select 2 points and expect retracement to pull into one of your Fib ratios, right? But your Fib extension, and it's basically a time extension tool. So rather than measuring a range, you're measuring time, and then that's extended within Fib ratios into the future. So something very interesting here happened, and I've only noticed this a couple of days back, which is sort of like, oh, hopefully not additional confirmation that this might be a very strong high. Hopefully it's not, but anyway. If we move from that high to this lower high, then exactly this high that we've had last week occurred at the 261.8 extension, time extension of this time, if that makes sense. You can also see where's previous instances. This low over here was at 161.8 with this little bounce to the upside. So it looks like the ES really loves the 161.8 extensions, the golden ratios, or the extensions of the golden ratios. Taking that high, for example, to this low prior to this move to the upside, that high there, where this lower high formed exactly at 161.8, the extension, for time extension of this drop to the downside. This low over here, again, at 261.8, exactly before this move to the upside. And what's also interesting, if you measure this distance and project it from that lower high over here, also confluence at 261.8, time extension, together with that confluence area of multiple market geometry lines running at different angles. Now, whether this means that's, you know, definitely high, we can't ever say that in the market. We don't know things for definite, but yeah, quite a lot of confluence from Fib time extensions at this area together with the market geometry. All right, that's mostly for someone that asked me in a comment section about that tool. Hopefully that answers your question. And yeah, we could definitely use that a little bit more often. If you guys are interested, let me know there in the chat box if you want to see Fib time extensions in action a bit more. But, you know, I don't want to confuse some people too much either. Some of these topics could be quite, how can I say, not difficult to fathom, but more advanced analysis techniques. And especially you have to use it correctly, which is very important. Okay, that being said, NQ. Also remember, I have to look at that example before we end today's session. Guys, I didn't look at the divergences because we don't have any on the ES. Like today's session, pretty much from the analysis sides of markets we normally follow, won't really be revealing too much, and nothing much has changed since Wednesday except for price reaching these potential support zones. Same thing here on the NQ. Price dropped lower. If you're new to this channel, please watch my previous videos where I explain that we have a confluence of multiple areas right at this low over here. Just a quick recap. You'll see me do this in that example I'm going to show you a bit later of where and how I find confluence zones. Yeah. Low red warning line, pitchfork tracking this decline. We have a angular support line running upwards, and where they all met each other, is where price bounced higher from. Now, I'm not saying it's the market geometry that allowed price to bounce higher. I mean, there's other geopolitical stuff, economical stuff, all that sort of stuff that can influence the markets as well. But it's quite, to a very high degree, shall I put it that way, that you'll quite often see prices pull back into an area. Then you have a news event, and then price moves out of those areas that you identified previously. Or you identify a zone, a news event happens, it shoots right to that zone and then reverses. It's very, very cool to see how market geometry tends to attract price and also reject price at certain areas or zones. Anyway, same thing here on the NQ without getting carried away too much. Is price now pulled back into this previous price structure. It was actually a little bit higher, 12,972. We've determined this zone over here that lies between 12,704 and 3/4 and 12,915 and a half. Price almost made it halfway into there, also in conjunction with this median line running to the upside. So this might be an area of support, and similar to the ES, although the price structure NQ is slightly different. Oops, let me get my labeling tool out. I think this was a 1, an A, B, C, a running flat B. This was a third wave, and now potentially that fourth wave. Let's get the snap mode off again, with the fifth wave to follow. Either breaking these previous highs, just pipping it, or actually moving a little bit higher. So again, if we see this, then it will be reasonable to expect that we're going to get a correction afterwards that might lead into a very massive impulsive move to the upside, taking the NQ to new highs this year or next year. But that being said, similar to the ES, if this was a third wave, it looks like an impulsive end of a third wave, then price should not on the NQ pull back into the area of where your first wave, where you assume your first wave was, which now lies, or still lies at 12,262. Price moves down into this area or touches this line without making new highs first, then it invalidates that this was the start of a new trending market to the upside. And again, similar to the NQ, our ES, we might then just be seeing something like this. We have this strong move, in this case, an expanded flat ABC, bam, down to the downside. ABC, bam, down to the downside. Although this does look like a 5-wave move to me, not a 3-wave move of expanded flat. So, again, crucial that price finds support very soon, both the ES and the NQ within those zones without testing those invalidation levels that I've shown. Okay. Crude oil, I'm not going to spend too much time on crude oil because price action is nonsensical, extremely messy. It's taking ages to load, and I should actually be, pardon me, on the October contract. Oh dear, I did load this earlier, and why is it taking so long? Let's just see if my connection's still okay. Yeah, I'm still connected. Come. Again, guys, if you've got any questions, please type them into the chat box. And again, I'll quickly go through crude oil and gold, and then I'll quickly give you that example of what I mean by what I like to look for with market geometry. So we're all on the same page, and you kind of have a better idea of what it is I do with these markets I'm analyzing. Oh dear, come on, crude oil's not loading. Let's jump to gold. Don't know if I need to quickly stop my connection. Let's do that. Bear with me, guys. Always some sort of issue some way. Not always, but when it does happen, then it is a little bit of a pain in the behind. Connections. I've got multiple monitors, guys. That's why I'm working off on the side here. See if that loads. You might have heard that. That was me reconnecting. Load, you bugger. There we go. See if we can quickly go to crude October contract. There we go. Bloody hell. Apologize for that, guys. We're back. Crude oil. Again, I won't go into the divergences too much today. Any case, we've said before that we were hopeful that crude oil would reach the 84.95 and the 84.12 levels, which were basically these lows that, and this was now taken from the September contract, which has now changed. These lows will be slightly lower or change because we're now trading the October contract. But in any case, I'm expecting these lows were set in March and in April to be taken out, and that was my expectation. Came excessively close to that, and then crude oil bounced higher. So good luck understanding what all this messy price action means. I'm hopefully that this is more of a leading sort of diagonal moving to the downside and not some sort of corrective move, because if it is, it might still take quite a while to materialize, meaning that we could potentially see even higher crude prices in the near future. Near future, I say. Who knows in the future? Which would not be a great thing. But, you know, this strong moves up, V-shaped bottoms, V-shaped tops, all the way up and down, up and down, up and down. From a trend, or sorry, swing trading perspective, not an easy environment to trade unless you're very patient for price to hit these market geometry levels that we had before. I'm just quickly going to mark one that might act as resistance if price actually moves higher from here, and that would reside at the center median line here at, let's call it 98.50-ish. Price breaks above this level and also clears this blue line to the upside, which beautifully acted as support resistance previously. Currently lies at 103.97 plus minus, guys. Let's call 104. Then I don't think something else is going on. Then we might still be correcting. And this is something I mentioned a while back, that we could even be seeing a very large triangle pattern that could take a very, very long time to complete. But again, we won't get into that too deeply just yet. Like I said, I'm not trading crude oil at the moment. It's too nonsensical for me. I've got no idea what's going on there. From a price point, or price action perspective, should I say. All right, quickly gold, and then we'll look at that chart example and then conclude today's session. We identified a zone previously in gold, price reached it, bam, straight down. We had a support area a little bit up from here, that didn't hold, price sliced to the downside. We previously thought, let me go to the 4 hours so we can, no, let's sleep. Yeah, let's leave it like that, for example. We had divergence here at the market geometry area. We also identified previously strong move to the upside, ran into this resistance zone, strong rejection to the downside. Thing is here is that we've now seen the 1, 2, impulsive potential third. Looks like we could have made a potential 4th, and we might be moving lower again. Might, I'm saying. Right into this high volume node, currently also in conjunction with the lower median line of a pitchfork sloping to the downside in the direction of this decline. Price hit this lower median line and has since found support. But temporarily or not, we'll have to wait and see. The problem is here, this looks very aggressive. If this is a 5-wave move to the downside, then whatever this was probably then corrective. Meaning gold could actually then move much lower than this previous low. So again, we'll look at gold next week, as well as all the other markets we're looking at. And I really would like to see how prices react, if there's any more insight into what the Fed's trying to do with the interest rate hikes or the planned interest rate hikes, and how people perceive what they say, which sometimes definitely not what they've meant. People read into things, markets might react differently to what most people believe. And, but in any case, we got those levels, we got the zones, they need to hold. If they don't, same thing on the ES and NQ, we got those invalidation lines. And on gold, if price breaks below this lower, much stronger, then I think there's a decent chance that we can see an accelerated move to the upside on gold. All right, guys, now let me give you a quick rundown of that chart example. It's actually a live trade that I've did, one of my better swing trades in the past recent years. Actually resulted in one hell of a move. And I just want to give a top-down approach very quickly. Should make quite a bit of sense once you see what it is I'm doing. I want to take off these divergences. And this actually occurred in the beginning of 2020, right before this insane move to the downside. Sorry, I'm on the Australian dollars futures. I actually traded the Forex pair, the AUD USD. But regardless of what you traded, the market geometry is exactly the same on the future side or Forex side, to some extent, depending on your broker and your data provider. But in any case, managed to nail this high to a T. Didn't actually trade it because it was New Year's. If you look at the timestamp below, there was on 31st of December 2019, before all hell broke loose that year. Markets opened on the 2nd, 2020, January. Remember the year when COVID started, or this was before COVID started. Obviously had a great New Year's evening, so I didn't trade that exact high. I actually waited for a decline. I had a pullback and managed to trade the most part of this decline to the downside with a very, very, very tight stop. So now how did I figure out that that was a potential high? And this is where the market geometry comes in. We generally want to frame the market or a trend. Well, first, let's determine what a trend is. Now, prior to this move to the upside, I didn't watch this whole thing. It just came on my radar around about this point here in 2019. This is what it was about just before Christmas. It's like, look at Australian dollar. Is there potential that this whole thing might be a corrective move? And I performed market geometry, identify an area before price reached it, and price reversed lower. So first things first. I think I used a channel here. And I went from a very important high to an important low to a prominent low over there. And that I use, I don't know, either this one or that one, I can't remember. But you'll get what I'm trying to say here. Oops, no, why? Bear with me. This snap mode can sometimes drive me insane. Let's get rid of that again. Try this one more time. And from a high to a high to a low. Here we go, finally. Now, this is what I call operating angle of a market. People will say, well, this is now useless because price action started breaking above that area. Quite often when you have a certain angle, those angles will continuously work into the future for a longest period of time. There are techniques to know when you should stop using them. I won't discuss that today. So what I normally do is Control-C, Control-V, and copy and paste the same angle and paste it above. Because price over here start breaking above it. Guess where price pulled back into before decline moved lower, right? You see this price behavior over and over and over and over again. That for me is not enough to try and take a trade. So what I try to do is I have my market geometry lines defining a trend to the downside. In this case, I use a channel. then you want to wait for price to pull back into one of these lines and see a rejection. But rather than just seeing a rejection and trade that, we want confluence from other market geometry techniques as well. In this case, if you assume you're dealing with a correction, which I thought might be the case when price can close to this line around about Christmas 2019, I then slope another market geometry line, lowest low, higher low on this week sequence, not this high over there, but that high over there was a bit higher than that one, and that higher low over here. Right. In this instance, I use the shift pitchfork, and quite often you'll have people say, but which setting do you use? There are techniques to know that, but in this case, I use both. If you're unsure which to use, and what you want to do is you then create a zone where there's confluence between two angular market geometry lines. In this case, one sloping upwards and one sloping downwards. By the way, I did change that when price moved a little bit above, and I changed this to the modified shift pitchfork. All right. Now you can see there's confluence where we have this line crossing up and then we have a line crossing down. That's what we call confluence. But rather than just that, when you know what corrections look like, this was a single A, B, C. Oops. Let's try that again. A, B, expecting that this would be a C, and where would the C wave pull back into? Very high degree into an upper median line. In this case, we had the downward sloping, we had confluence as well. So we had an ABC. C waves of a single zigzag, which is your most common corrective format, generally run the same distance or reaches parity with your A wave. We have a 100% extension. Price overshot that, but everything came together right there. Now, hopefully you guys are starting to see what I'm trying to do here. You want to see multiple instances of various techniques, including market geometry and fib work, all coming together at a place. And when you see a reaction from those areas, then you trade. But you know, these zones are identified prior to price reaching there. And although it was New Year's when that actually decline appeared, judging by the scale of this massive corrective move to the upside, I had more than enough time to wait for price to show me that it wants to move low. It actually pulled back into an area of market geometry and then shorted it from there. So it's perfectly fine to do a lot of these things after the fact as well, which is what I'm trying to say. Okay, you don't really always have to be present at these areas, but as long as you've done your homework and you identify them, you see reactions, and then you've done your plan, and then you execute your strategy at a later stage. And finally, before I end today's session, similar to what I did with that fib work over there, if we take the time it took from this low to that high over here, oh, come on, and we use that same distance, right, to this low, then the C wave took exactly the same time as your A wave took in time. I think there was something else here. Go from low to higher low, and you bring it back to here. Yep. Same time from here to here, from there to there. Confluence of two time Fibonacci time zones. The same ranges between the A and the C waves. Price reaching upper median line of a pitchfork tracking your potential correction, as well as reach the major trend of showing downwards upper channel line. And that's a beautiful confluence area. We had a rejection lower, and that's typically what you want to do. So that very quickly sort of try to explain what I try to do with my market geometry. And again, if you're not sure of what I'm doing here, then please rewatch it. And I think that will start helping to explain why I'm doing all the analysis I'm doing and why I'm doing it. on the markets that we're currently following. Okay, guys, that concludes today's session. Again, be interesting to see how the ES and the NQ react, as well as gold that's in those support zones. But again, yeah, so crucial end of week coming up. And then I'll be back on Friday. We'll chat about things again. As always, if you've got any questions, let me know. If there are any markets you want me to have a look at, then drop me that in the chat, and then I'll look at them for you. Granted that I have the data feed for that. And then, yeah, it'll be the end of the week. And then I'll see you guys Monday again. We always do these sessions if you need to it on Mondays, Wednesdays, and Fridays. But again, I'll be back on Friday before the weekend. Right, guys, no more questions coming in. Then I'll end things here today and say goodbye. Let's give it a few seconds. Yeah, okay. Right, guys, all the best. Take care. And until next time.